Okay, let's dive into this. We're going to talk about one of the most interesting signals in trading, and that's how to spot when a really strong climbing trend might be, well, running out of steam and getting ready to turn around.
I mean, you've seen this happen, right? It's a classic story. You see an asset just climbing and climbing. It looks like a sure thing, but the second you think about jumping in, whoosh, it just collapses. It's a huge fear for a lot of traders, but what if there were warning signs you could learn to spot before that happens? Well, there is. There's a specific chart formation that can be that exact warning sign. It's called a rising wedge, and learning to spot it can be the difference between buying at the absolute peak and actually being prepared for a reversal. So, what exactly is a rising wedge? Let's break it down and really get into why it's such a powerful signal that a trend is getting, well, tired. Okay, so here's the official kind of textbook definition from our source material. The key things to catch here are bearish, which just means it's a signal prices might head down, and converging, which means the price is getting squeezed. But honestly, I think there's a much better way to think about this. I want you to picture a mountain climber. At the beginning of the climb, the path is pretty wide, the climb is steady. But as they get higher and higher, the path starts to get narrower and steeper. Now, the climber is still moving up, sure, but they're getting tired. The rising wedge is basically the chart version of that tired climber. Okay, so if we're going to run with this analogy, we need to know exactly what to look for. What are those telltale signs that our climber, the price trend itself, is getting totally exhausted? So the key is to look for a few really specific signals. First, you've got two trend lines, and they're both pointing up. But, and this is important, notice how they're converging. They're squeezing the price into a tighter and tighter space. That's our climber's path getting narrower. This is happening because each push upward is a little bit weaker than the one before it. The price is still technically making new highs, but each new peak is a smaller gain, just like our climber taking shorter, more tired steps. And maybe the most important sign of all, look at the volume. It's going down. And why is that? Because there's just less enthusiasm. Fewer new buyers are willing to chase the price this high up. The energy is just fading. This slide just perfectly lays out the difference. I mean, a healthy uptrend has strong, often growing volume. You can almost feel the excitement. But in a rising wedge, that volume is drying up. The incline gets steeper. It feels almost desperate. And it's pretty clear the buyers are starting to lose their resolve. They're just getting tired. Yeah, think of volume as the energy that's powering the trend. So when you see the price getting pushed up, but the volume, the energy is falling away, that's a massive red flag. It is literally the sound of our climber running out of breath as they take those last few painful steps. Okay, so we know how to spot the pattern. Now for the really practical part. How do you actually turn this observation into an actionable trading plan? Here's a simple 5-step plan. First, you identify the pattern, those two converging lines. Second, you confirm it with that declining volume we just talked about. That tells you the trend is weak. Third, and this is absolutely critical, you wait. You have to be patient. You don't do anything until the price actually breaks and closes below that lower support line. That is your trigger. Once that breakdown is confirmed, then you can consider entering a short position, and of course you immediately manage your risk by placing a stop loss just above that breakdown point. And to bring it right back to our analogy, that breakdown below the support line, that's the exact moment our exhausted climber finally loses their footing and starts to slide back down the hill. It is the confirmation that the upward struggle is over, and now gravity, or, selling pressure, is taking over. All right, let's zoom out and get the big picture. What are the most important things to remember when you see a rising wedge forming? This quote from the source material really sums it up perfectly. It's not just some random shape on a chart, it's a powerful tool that's based on market psychology. It shows that shift from confident buying to exhausted selling. It's really a way to read the story the market is trying to tell you. But, and this is a huge but, remember that no pattern is a crystal ball. This is signaling a potential shift, not a 100% guarantee. So it's always a good idea to confirm with other indicators. And please practice spotting these on historical charts before you even think about risking real money. And like with any trading strategy, solid risk management is completely non-negotiable. So the real takeaway here is this. You now have a framework for spotting when an uptrend might be losing its strength. And that analogy of the tired climber gives you a really intuitive way to remember the signs. So the only question left is, where are you going to start looking for it first?